Welcome back. You're watching Hot Stocks, a bit volatile.
IIFl-Nirmal Jain, Chairman IIFL, joins in on the show to talk more about what his prognosis of the markets are. Hi Nirmal, thanks for joining in. The markets have really been all over the place. You know, a sharp correction last week, then a recovery this week. Are you surprised by the pace at which things are taking place?
The pace of correction and recovery has been too quick. For a healthy correction, the correction should have lasted for some more time and should have at least traced back something like one-third of the entire rally, say from 8,000 to 21,000 or similar ranges in Nifty as well. So from that point of view, I think market will keep looking for more regions to correct. The correction is very quick and to my mind, the healthy correction should have been a little longer.
Right, so Nirmal, do you believe that markets have actually topped out for next 6 months?
No, difficult to say. I think market will be news driven. So as I said, FIs continues to be bullish on the market. They continue to pour in money. So it's quite possible that market may surpass the previous peak and then correct. So now it's very difficult to figure out a week to week or month to month movement. But if you look at 1 year or 2 year horizon, markets will give returns in line with expected earnings growth, which is around 20% per annum.
Right. Nirmal, so far auto and pharma have outperformed the markets and realty and infra have been laggards. Do you expect a shift in leadership anytime soon?
I think for next 2 quarters the same story will continue, because in real estate, real estate prices have not corrected, particularly in the larger value pockets like Bombay. The prices tend to be very high, and that is worrying not only a common investor but also policy makers. So we'll see more adverse policy moves on that. That is one. Secondly, interest rates are very high, and particularly short-term interest rates now tend to be very high. In fact, yield curve is already flat and it is threatening to invert, which is not a very healthy sign in terms of liquidity and short-term movement. And similarly for infrastructure also, the interest rates being high as well as commodity prices will move up with QE2 and global overhang of liquidity. That is one. And secondly, there are no project flows, or they are not as much as one would have expected with the new government in power during the last couple of years. So these are the things which are driving the valuations down, and the earnings are also not growing the way they can. Maybe things will start changing from mid-2011. So maybe second, third or fourth quarter we should see, particularly infrastructure picking up. Real estate is always a challenge, but from investors' point of view, I mean, if I were an investor, I would look at investing in real estate rather than real estate companies as such.
Nirmal, what about PSU banking stocks? Have they corrected enough? Are PSU banking stocks looking attractive yet again?
But they are also bouncing back. So PSU banks will always quote at a discount, and there is apprehension that after whatever has happened in the recent past, most of PSU banks will get into sell and will be very cautious in lending. So their credit uptake will slow down, which will impact their earnings as well. But it's very early to come to that conclusion. But to my mind, PSU banks as well as private banks both have a good, bright future from investors' point of view.
So Nirmal, what's your big sectoral call for the next 6 months?
I think domestic story is very strong. So continue to look at FMCG, pharma, and also IT sector, which is now with the current account deficit is already 3.3%. There will be pressure on rupee to depreciate, and other than that, they are recruiting, they are getting good orders. So there is one sector that should do well.
In the last time when we interacted on the same forum, you had identified 2 large cap names for us, Axis Bank and Dr. Reddy. Have you added any new names to your preferred bets?
Yeah, last time I was talking about Dr. Reddy, Sun Pharma, these stocks have done well. But what I would, last time I was negative on was metals and commodities. But now things have changed since when Q2 has come and commodity prices have started looking up. So one should try and add to portfolio certain commodity stocks like Coal India, Tata Steel and Hindalco as well.
Nirmal, despite the cyclical and the high beta nature of the entire commodities pack, you continue to like that?
Because they are at a low. I mean, they have started rising, they have started moving up. So from the portfolio point of view, one can balance and take some bit of risk and look at these stocks, because the beta is always high. Because commodity prices go up, stock prices tend to give more than proportionate return. So to balance your risk return profile, take a little bit of more risk and have a small part of portfolio in commodities as well.
Alright, Nirmal, a delight to have you on ET Now, and thank you for joining us. Absolutely flat for Indian market, 60-14 for the Nifty, 35 points odd up for the Sensex. So, Deepak, you hang in there, but Aisha and me are out of here. Thanks for watching Hot Stocks and have a great day ahead.